Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Well, Yatin, there's a spring in the steps when it comes to the markets, given the fact that, all through April we've seen good gains, consistently hitting fresh highs, and today was no different. The Nifty hit a fresh high. The Nifty Bank index, edged past that 49,000 mark for the first time ever. The Nifty Mid Cap Index also hitting a fresh high. In fact, for the Sensex as well, we've shut shop above that 75,000 mark. The Nifty also above 22,750. This afternoon. In fact, if you look at the broad end of the markets, both the Nifty mid and small cap indices ended with gains of over 1% or thereabouts. Advanced decline ratio was also evenly balanced, although tilting a bit towards gainers, 1:1. That was the kind of ratio we saw. Sectorally, most of the sectors were doing well, barring the pharma pack. Metals were shining bright once again. You had FMCG as well doing well today, Yatin. This pack has been underperforming, but today, among the gainers, PSU banks, all these indices that I've mentioned gained in excess of 1% or thereabouts. If you look at the individual movers, Coal India, BPCL, in fact, UPL as well. From the specialty chemical basket doing well today. Kotak Bank, ITC, Hindalco, these were among the few gainers. In fact, among the gainers today. On the losing end, you had the likes of Cipla, HDFC Life, Divi's, Maruti, L&T and HDFC Bank. But Yatin, high flyers in the mid and small cap end of the markets, but also want to talk about the Amphi data that came out, right? There's been an outflow from small cap funds for the first time in 30 months. Seems like it was in reaction or, the aftermath of the SEBI diktat on the mid and small cap funds, right?
Yeah, that is possible. And I think more importantly, Nandita, a lot of funds also stopped taking, fresh funds.
Yeah.
So when you have inflows and outflows happening, it is netted. But since a lot of funds were not really taking, money, that inflow was blocked and there was some bit of outflow or some, profit taking, because I think mid-cap funds were up 70-80% on an average.
Yeah.
So nothing to worry about. But yes, sentiments being sour there after the SEBI diktat. But if you look at the broader in the markets, obviously metal stocks did well. So did stocks like HEG, Tanla Solutions. A lot of specialty chemical stocks were up. Obviously, we'll talk on those names as well. But we have stocks like Vedanta, Fluorochemicals, Gujarat Power, and McDowell's, Hindustan Petroleum. All of these stocks, moving anywhere between 5 to 6%. What did not do well is Sun Pharma Advance. That stock was on lower circuit, 5% after the announcement that their drug trials in one of the places has not been successful. Anand Rathi Wealth, after a 7% move yesterday, down 4% today. All Cargo Logistics and Home First Finance were the other stocks which corrected. But yes, it was a great day for select mid-cap stocks like HEG, Vedanta, Aegis Chemicals, Petronet, Indigo. That stock made new record levels. In fact, Indigo is now the third largest airline by market capitalization globally. So great going for that stock. NAM India, Graphite, Policy Bazaar, all of those stocks hitting fresh 52-week highs.
Well, what was once again hitting fresh 52-week highs, I think, were some of the metal stocks, right? Metals, yesterday you mentioned that the entire index was at a fresh high. Today as well, the Nifty Metal Index, strong momentum continues. And, not just that, of course, on the back of the strong momentum in the entire metal space, we had an upgrade coming in for Vedanta from CLSA, which really fired up the stock. The stock hit a fresh 2-year high today. In fact, ended high by about 7% or thereabouts. It's been upgraded to buy from underperform. Target price has been raised to 390 rupees from 260 rupees, which implies, basically it's 50% higher than than CLSA's earlier target. In fact, CLSA says that the company is well poised to benefit from the commodity upcycle given its diversified exposure. So yesterday you were mentioning that metals like copper, aluminium, zinc, silver, all these commodities were, the prices have been on an upswing at multi-month highs. So CLSA believes that Vedanta is poised to benefit from that. In fact, Vedanta has also been making efforts to increase its capacity and profitability across segments, and that bodes well. The company has guided for the group level EBITDA to rise to $6 billion from $5 billion in FY25, and in FY26 the guidance stands at $7.5 billion for FY27. While debt at parent company has declined meaningfully, but for the Indian unit it has gone up, and over the past 2 years Vedanta's parent company has seen a debt reduction by $3.5 billion. But as I mentioned, the Indian listed company has seen an increase in its debt, but there is a plan in place to cut debt down by $3 billion over the next 3 years. And of course Vedanta, just a while back had announced a reconstructuring, right?
Yeah.
It had said that it will be restructuring rather. It had said that it will split into 6 units, so that ends or that gets completed in December. So leverage as well as restructuring, these are the 2 key monitorables for Vedanta according to CLSA. So all in all, the brokerage is fairly bullish on the stock. And if you look at the stock performance, Yatin, over the last, in fact, on a YTD basis, the stock is up almost 30%.
Absolutely, and strong momentum coming in there today, also 7% higher for that stock. But Nandita, apart from metals, one big mover in trade was the specialty chemical space. In fact, the stocks like SRF, Navin Fluorine, Aarti Industries, Deepak Nitrite, Atul Limited, we have Vinati Organics, all of these stocks were doing well in trade. Now, the reason here is that the March export data for few of these specialty chemical players have been quite strong. Obviously, it is not possible for us to collate all the data, but Phillip Capital has collated data with respect to Vinati Organics, Aarti Industries and SRF. The most important point here is that for SRF, there is a comeback in a few segments, and if you look at Aarti Industries and Vinati Organics, both of these companies have posted record export sales for the month of March. Obviously, the price of certain chemicals has been lower, but the volumes have been picking up. In fact, according to the note which Brokerages has published, Aarti has seen the highest ever exports in March, up 90% on a year-on-year basis. And even if you look at it on a sequential basis, which is quarter-on-quarter, there is a 7% growth for Aarti. No doubt that stock was up 6% in trade. Similarly, Vinati Organics, the highest ever exports in March, up 37% quarter-on-quarter. And SRF, most importantly, the sequential growth in export is 35%, led by a 50% growth in the refrigerant gas segment, which is one of the key segments for SRF in terms of profitability and margin. So, once again in Q4, especially in March, we have seen a good comeback for chemical companies. Whether or not FY25 will be on the recovery path, we don't know as yet, because China is a factor which is still unknown to the equity analyst community. But yes, the stock reaction today clearly indicating that the market was happy with all of the data point. Aarti Industries, as you can see on your screens, ended up nearly 5.5% higher in trade.
Right, I think the jury is still out whether or not specialty chemical will stage a very good rebound, comeback, and of course much depends on how the China factor really plays out, Yatin. But the other stock on my list today is Bharti Airtel, ended with gains of somewhere around 2%, but a very constructive and bullish report coming in from Antique. It has initiated coverage with a buy rating, target price at 1,505 rupees a piece. It believes that the company is set to ride its best financial performance phase in over a decade. Now, the favorable factors that Antique has mentioned is the fact that there could be a tariff hike after elections, and Bharti Airtel is expected to lead that. 2G upgradation, the strong enterprise growth, and a fall in capex post the 5G rollout over the next 3 years. These are some of the factors that will drive performance for Bharti Airtel according to Antique. In fact, it expects the return ratios to top 20% vis-a-vis the current return on equity on the stock is 12%, Yatin, and that is expected to top 20%. And the historic, high free cash flows will help in deleveraging of balance sheet. That's what Antique is saying. Airtel has chosen a different 5G rollout path vis-a-vis its key rivals. That is being seen as a challenge, but on the whole, it is not going to, impact the subscriber base as well. And, Antique says that it will not lead to any major negative impact for the company. Aside of that, Antique has also noted that, Africa is among the key markets of Bharti Airtel, right? And it remains among the top 2 players in 13 out of 14 African markets it operates in. So, yeah, all in all, if you look look at the kind of up move that the stock has given, Yatin, 60% up in the last 1 year, and on a YTD basis, it's already up 20%. Would you say that Antique is a bit late to the party?
Not late to the party, but I think it really sees further upside in the stock. I think in a large cap stock, when you see a better upside, I think you still have the bus on your side and you haven't missed the bus.
Yeah.
But yes, that is the equity market. Every day is a new day. Every day there is a new brokerage note.
But ab ki baar 50,000 on Bank Nifty, that's what the street is really waiting for, because new high has become a way of life now, Yatin.
Absolutely, and 50,000 on the Nifty Bank. We have already 75,000 on the Sensex. God knows, when we have 25,000 on the Nifty.
Yeah.
Ab ki baar 25,000 on the Nifty is something you should watch out for. But Nandita, with that, it's a wrap.
Well, it's a wrap, and you can see the smile on Yatin's face. It's a market holiday tomorrow, and he's very happy, and so are we all. But with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. But you guys stay tuned to Money Control for all your other news and updates.